All right, let's talk about a company that's a real head scratcher in the tech world. It's growing like crazy, its customers absolutely love it, but its stock has just gotten crushed. This is the story of Navan, and we're going to dig in and figure out what is really going on here. So the big puzzle with Navan is this huge disconnect. You look at the stock chart and it tells you one thing, but then you look at how the business is actually doing and it tells a completely different story. On the surface, yeah, it looks like a broken IPO, but could it actually be a hidden gem? That's the paradox we're going to unpack today. I mean, just look at these numbers. The stock has been hammered, trading at a valuation you'd expect from some old, stagnant company. But at the same time, the business is growing at 35% and is signing up some of the fastest growing companies on the planet. So you have to ask yourself, what is the market missing? Okay, so to really get Navan, you first have to understand the nightmare they're fixing. For decades, corporate travel and expense, or T&E, has just been this clunky mess of different systems. You had one for booking flights, another for filing expenses, a third for payments. It was a total headache. Navan's big idea was to just sweep all of that away and replace it with one single beautiful platform. Everything from booking and payments all the way up to the app you use on your phone is tied together by one central AI layer. And that AI is really the brains of the whole operation. It's the key to everything. And this is what that actually means for the user. For an employee, what used to be a 45-minute slog through some clunky old system can now be done in just 7 minutes. That is a massive productivity gain. And believe me, employees and their managers absolutely love it. And look, this didn't just happen overnight. You can see a super consistent track record of them building and buying new pieces. But what's really telling is what they did in 2020. Remember when the pandemic hit and travel just stopped? Well, they didn't panic. They used that downtime to go all in on building out their expense and payment products. And that move, that pivot, fundamentally changed their entire business. A great product is one thing, but how does Navian actually make money? Okay, this is where it gets really clever, because their business model just completely flips the old way of doing things on its head. The secret sauce is something called the supplier subsidized model. So instead of charging the corporate customer for every little thing, Navan makes most of its money from the suppliers, the airlines and hotels, in the form of commissions. This lets them pull off this brilliant Trojan horse strategy. See, Navan can walk into a CFO's office and offer this amazing, best-in-class travel platform for almost nothing because the suppliers are paying the bill. It just makes it a total no-brainer, an easy yes. And then, once they're inside the company, that's when they can start to cross-sell their other high-margin financial products. It's genius. And the result is a revenue mix that's, well, it's pretty lopsided. A whopping 92% of their income is tied to how much people travel, with only a tiny 8% coming from regular software fees. Now, this model gives them huge upside as their clients grow and travel more, but it also carries a real risk if there's a downturn in travel. So that model is powerful, for sure. But what makes it defensible? What stops a competitor from just copying it? Well, that brings us to the technology, and specifically how AI is building this deep, widening moat around Navan's business that's getting harder and harder to cross. The impact of AI is just crystal clear when you look at the profits. Navan's non-DAP gross margin, which is basically how much they make on each sale, is around 74%. Now, compare that to an old-school player like American Express Global Business Travel, which is chugging along at about 57%. That massive 17-point difference, that's almost entirely driven by automation. And here's exactly why. Navan's AI agent, Ava, now resolves over half of all customer support issues without any human ever getting involved. This completely breaks the old model where more bookings always meant you had to hire more people. It just gives them a fundamentally more scalable way to grow. But here's the real kicker. This goes way beyond just saving money. Because Navan brings all this travel, expense, and payment data into one place, it creates this powerful data flywheel. Every new transaction makes the AI smarter. A smarter AI improves the product. A better product attracts more customers, and the cycle just keeps repeating and spinning faster. This is an advantage that their fragmented, old-school competitors simply cannot replicate. So, the strategy sounds fantastic. But what does the evidence actually say? Let's take a look at who's backing the company and what the data tells us about how they're really performing. When you look at who owns the company, you can see who's betting on their success. It's heavily owned by its founders, for sure, but also by some of the most respected venture capital firms in the world, like Lightspeed and Andreessen Horowitz. These folks all have serious skin in the game. And this quote from the CEO, Ariel Cohen, it just speaks volumes about how sticky the product is. I mean, think about it. Once a company wires its entire travel, expense, and accounting systems into the Navan platform, the cost and the sheer pain of switching becomes massive. It gets woven right into the fabric of how the company operates, making it incredibly hard to rip out.
But of course, no analysis is complete without looking at the risks. The CFO leaving just 6 weeks after the IPO definitely rattled some investors. That usage-based model makes them very sensitive to economic shocks, and while they talk about getting profitable, the company still loses money on a GAAP basis, the standard accounting method, mostly due to things like stock-based compensation. Plus, they have stiff competition coming at them from all sides.
So finally, where is Navan headed from here? Let's look at what management themselves are forecasting and what their plans are for future growth. Well, the company is forecasting some really strong continued growth for fiscal 2027, with revenue expected to hit somewhere in the mid-$800 million range. But here's the crucial part. They're also projecting a non-GAAP operating margin of around 7%. Now, that metric excludes some expenses, but it's the number management is pointing to show a clear path towards sustainable profitability. And they're not just focused on their existing markets. Navan is expanding its reach with a brand new product called NAVN Edge. It's an AI platform aimed at the absolutely massive $56 billion market of business travelers who aren't part of a formal corporate program. Think freelancers or employees at really small startups. Which brings us right back to our central question. Is Navan a category-defining leader whose true potential is just being overlooked by a market that's focused on short-term noise? Or are the risks of its business model and the fierce competition actually valid reasons for the market to be so cautious? The answer will likely define one of the most interesting growth stories in tech over the next few